Shares of AT&T just off their lowest closing price in 30 years as a recent Wall Street Journal investigation into toxic lead cables and a series of downgrades weigh on that stock. Deirdre Bosa digs into that for us in today's Tech Check. Hi, Deirdre.
Tyler, 1993 was the year Whitney Houston topped the Billboard 100, Jurassic Park won the box office, Seinfeld won an Emmy, and AT&T traded at $13 a share. 3 decades later, AT&T is back at those levels after a journal report over toxic lead cables left behind by telco companies. AT&T has contested the report, calling the testing methodologies flawed, but scrutiny has begun with lawmakers. They're asking for more details, and investors as well, who are trying to size the cost and litigation potential. Now, this is the latest catalyst pressuring shares, coming on top of repeated downward revisions for AT&T's wireless and fiber growth business and that slowdown in subscriber growth. To be fair, guys, Verizon also has a similarly ugly chart of returns over the last 3 decades, and it's also getting hit by the lead cables report. So you're seeing them come back a little bit today, but some investors, they are looking at them to buy them close to historic lows. And another reason may be their dividend yields. AT&T's is 8.2% versus the S&P's 1.5%. But guys, it's the uncertainty here that's bringing these stocks further down. No one knows how long this is going to last and what the costs are going to be.
These are legacy telephone companies that we're talking about here. Are any other companies like cable companies afflicted by the same issues or not?
Yeah, they are. There's other companies that have been selling off in this. There's Frontier Communications. There's Lumen Technologies that have been affected by this report from the Wall Street Journal. But, you know, really we focus on AT&T and Verizon, AT&T in particular, because it is so widely held, Tyler. It's in mutual funds. It's in hedge funds. It's held by individuals. And the idea that it has gone nowhere in 3 decades, it hasn't created any value for its shareholders, is pretty remarkable.
And of course, it was AT&T was the phone company. Verizon was a portion of the phone company. It was Bell Atlantic, it was CNP Telephone, it was a lot of other things. But these were all branches off the AT&T tree.
You know what? They've also tried to become much more than a phone company, right? Part of the reason that, you know, hasn't created value is all of these sort of doomed acquisitions the company has gone after. Remember, at one point it tried to go after T-Mobile. There was a huge $3 billion breakup fee. There was DirecTV, of course, and Time Warner. Who could forget that? $85 billion now, you know, offloading. Yeah. So part of the reason it's huge debt load as well because of this.
But it's, you know, these talk about some of these are kind of cables running through the sea or through Lake Tahoe. Some of these are cables that just are hanging over bus stations and, you know, near where children are going to elementary schools. And now that this is highlighted, they're going to have to remediate it somehow. And I don't know exactly what precedent there is, Deirdre, but I think it's going to be a costly one.
Yeah, I mean, there was, I guess, some precedent that some people have pointed to was this issue over lead paint. It involved Sherwin-Williams, Conagra Brands, and NL Industries. And it was ultimately, I think, a more than $300 million settlement over lead paint lawsuit. But it actually took years to resolve. So on maybe the flip side, it could take a very long time to figure this out. So that cost could be in the future. But that's the one sort of precedent that I've read about.
All right. Deirdre, for now, thanks very much. Our Deirdre Bosa.